Good afternoon. This is Carrie Barnes with Building Managers International, and today I'm here with Carolyn Meadows of Becker and Poliakoff, Kip Kollmeyer of Mitchell Insurance Services, Michelle Newton of Insurance Office of America.
The topic of today's discussion is fiduciary duty required of board members of an association and the obligation to avoid self-dealing, how to recognize self-dealing, and the discussion of some examples, particularly in the context of insurance policies, insurance coverage, and selection of the association's insurance agent. Fiduciary duty is a relationship in which one party has placed the utmost trust and confidence in another party to manage and protect property, money, or some other interest. When someone accepts a board member position, they accept the fiduciary duty to the association and the membership, which requires placing the best interest of the association over the board member's best or self-interest. Some penalties that can be imposed for self-dealing, besides being the basis for removal from the board, depending on the circumstances, a board member could face civil or criminal penalties or be sued by the members of an association. If the act involves a criminal act, unjust enrichment, or fraud, the board member could be personally liable beyond the coverage of an insurance policy. And to get to some specific examples of self-dealing, the more obvious ones are criminal acts such as embezzlement or the theft of property. However, a kickback is also a type of self-dealing, and they're not always as obvious. Kickbacks can be in the form of cash or some other benefit, such as a discount for services or doing something for free for someone. We can look at the specific language in this Florida statutes, which is instructive in understanding what's prohibited. The three statutes governing condominiums and cooperatives and homeowner associations, the language is fairly similar, but it gives us some good idea of what exactly the legislature had in mind in prohibiting some of this activity. Looking at the specific language of the Florida statutes in chapters 718, 719, and 720 is instructive, and all of the statutes read very similar. The condominium is the most inclusive, so we'll pull some of the language from that. It states that an officer, a director, or manager may not solicit, offer to accept, or accept anything or service of value or any kickback for which consideration has not been provided for his or her own benefit or that of his or her immediate family from any person providing or proposing to provide goods or services to the association. Any such officer, director, or manager who knowingly so solicits, offers to accept or accepts anything or service of value or kickback subject to civil penalty and possibly criminal penalty. So the important thing in this language is that it can be an offer from a prospective vendor or a current vendor, someone who wants a contract or someone who has a contract currently with the association. In the context of condominiums, the board member can be subject to civil penalty as well as criminal penalty. In cooperatives, it's just a civil penalty. In homeowner association, it's neither. So some examples of a kickback or something that would be prohibited is obviously whenever a person is trying to obtain a contract, if they are offering to either provide a service to a board member in exchange for that contract, or even in some instances provide cash to that board member. Those are unacceptable arrangements. I've seen one instance where a landscape company had offered to re-landscape the board president's personal property in exchange for being awarded the contract for the association. That's a pretty clear cut, or seems to be a pretty clear cut kickback, but some gray area, you can see where some gray area might come into play there.
I think there's some more gray lines that are harder to find or harder to see. And some of those do deal with the insurance side of it.
Thanks, Carrie. So an important factor of being a legally operating board is to have a good team in place. You want to act like a well-run board, right? So there are different steps that you have to take. Being up to par and knowledgeable about what the statute says for your specific association is huge. I wanted to get into a couple of scenarios of some associations that I've worked with here recently that have been self-managing and have had some adverse effects of that self-managing aspect. One association, they switched from a management company that they felt wasn't, helping them in any case, that they were just spending money for poor service. And so they decided that they would switch to being a self-managed board. That process is fine, but what ultimately happened was there was a board of directors member that came on, was sort of a partial owner. They didn't have a legal meeting or post a legal meeting to have an election or to change the board. So there were some issues there. But what they did was they ended up firing the insurance agent and hiring an out-of-state agent that has no experience with Florida condominiums or homeowners associations. So that's scenario one, where you're working on a fine line, you're walking on a fine line, or where you need to be careful, at least from that aspect of self-management. You don't want to have a board member that takes all control and starts to do what they want to do if you don't have dedicated board members in place to sort of keep that distribution of power out there. There's a reason that there's three branches of government in our country, so that one specific branch doesn't have more power than another. And I think that's important when you're talking about putting together a board and having at least good members or good at least somebody that's involved and knows legally what they're getting into. My second scenario, from a self-management issue standpoint, I'm working with an association now that is self-managed, and they have an agent that hasn't helped them on their insurance policy by helping them, or at least getting them to acknowledge that they need to update their insurance appraisal. So they've gone more than 10 years without updating their insurance appraisal. And if you're a condo, statute 718 says every 36 months. So if you've gone 10 years without updating your appraisal, and then you talk to a condo insurance agent that points this out, you may be in shock. So keeping up with the statutes obviously is very important. But what I would say is, to take away from all of what I've just rambled on, is use community association focused vendors. That is so important. You can't just get your buddy from Ohio or from out of state because he can help you out with some markets if they don't have the knowledge of how Florida condo law or even a homeowners association law changes, because it does change frequently. So that would be my biggest thing, is if you're self-managing, make sure you have the right team in place, dedicated board members, and that you're using association-focused vendors like the good people that we have with BMI.
Yeah, I think you hit the nail on the head with that one, because of the fact that so many people think, oh, well, I'm going to hire this gentleman because they know me, or I'm related to them and I know they'll take really good care of me. But if that person's out of state and they don't understand flood insurance and they don't understand windstorm coverage, I know personally, as a retired agent, I was in Atlanta doing insurance coverage. I had no clue about flood and windstorm until I moved to Florida and had to focus on that because of the properties here. So you have to be super, super careful. We're not just, because of where we live, I think there's more room for error in insurance than in a lot of places because of the windstorm and the flood. Michelle, you do a lot with flood. Do you agree with that?
Sure. I think on the wind aspect and on the flood aspect, piggybacking off of what Kip said, it's extremely important to find a specialist who knows what they're doing in that specific local area and for that specific type of risk. And if you focus on finding specialists, then you'll be less likely just to pick, your cousin or your neighbor or maybe your personal insurance agent, because you're going to be looking at a different pool of people straight off the bat. It's not going to be who I know in my personal life. It's going to be what's this pool of specialists that I can look to, whether that be for insurance or whether that be for an association attorney. So I do think that it's important. On the flood side of it, yeah, I mean, if it's an agent that doesn't do flood all the time, they could very easily take a FEMA flood policy, move it to a private market, and then that private market could cancel it the next year, and there could be huge ramifications if they have to re-enter FEMA at a later date. So that is a huge issue. And somebody that doesn't deal in flood all the time, just like if it might be an agent that doesn't deal in condos all the time or HOAs all the time, wouldn't necessarily know the possible consequences of changing something that's in place. And like Kip said, for an appraisal, they haven't had an appraisal in 10 years. Not only is that an issue because they were being guided wrong by their specialist, but there's a fiduciary responsibility that they're missing too, because the buildings are definitely undervalued if they haven't been updated in 10 years. We see values go up probably around 10% or so every 3. So you can imagine what that's going to look like after 10. And then Kip coming in there and trying to quote it, they're going to see a huge value increase, probably kill the messenger, unfortunately for Kip. But if it had been done right from the get-go, then they wouldn't be in that situation. So yeah, it's extremely important to focus on your specialists and make sure that who the board is interviewing and then hiring know what they're doing for that specific type of risk. And again, that will help to prevent, hiring Uncle Bob.
Yeah, I think to echo that real quickly, fortunately for this association, we're going to be able to find a program for them that's not going to be drastically different on their budget. But if you're self-managing, your budget, if you're trying to have a sustainable budget, insurance is a huge line item in your budget, well, probably one of the top, if not the top. And so if you're building a good team, if you have dedicated board members, that's where the specialist does come in, because there are agents outside of the state of Florida that can write flood insurance, but Florida has such a unique exposure that not many other states do. Yes, you have Gulf Coast states that have similar exposures, at least from a hurricane standpoint, but especially in Pinellas County or the Tampa Bay area, when we're surrounded by all this water, there's nowhere to go. So knowing those exposures, having somebody that's dedicated to the condo or the homeowners association line of work is so important. We're going to save this association from that standpoint. We're going to get them up to par, but they're working around co-insurance issues, all these different things, and that can be a shock. I told them, I don't want to be the guy that tells you you're doing it wrong. I just want to be the guy that helps you get in the right place. And whether you decide to work with me or another agent, just make sure that agent is condo focused or homeowners association focused.
Carolyn, I know that you said that if a board member or board members accept a kickback, that they could be criminally liable. What about the person who's giving the kickback?
The person who's giving the kickback, I don't know that there would necessarily be a vehicle for some sort of action against that person. Obviously, they would not be given the business of the association. So I don't know that there would necessarily be something the association could do against that person. I think their cause of action would really be against the board member. That's clearly prohibited behavior, within the statute. That also opens that person, the board member who's accepted a kickback of some kind or some kind of compensation, it opens them up to personal liability, which is not covered by the association's insurance policy. Depending on the circumstances of whatever it is that they've done, they can be personally responsible, and that falls outside the scope of coverage, and that might be something that you could speak to as well. But there are instances where a person could be personally responsible.
I think it's kind of like when you go back to breaking it down to make it easy. Have you ever gone to a auto repair service and you let's say you drive a BMW and the auto repair gentleman says, we don't work on foreign cars. It's kind of the same thing when you're dealing with attorneys and insurance in the community association world. He knows a lot about cars and he could probably do some repairs, but he's not savvy in that specific brand. And community association world, there are attorneys and insurance agents who do nothing but that. And one trick is if you go to someone's website and let's say you're trying to find somebody to do your attorney services or your legal services or your insurance services, if they do not have a page dedicated to community associations, or if community associations services doesn't slap you in the face when you go to that web page, that might be the first key factor there, because that means they're dealing in a bunch of different things. But when they really have a heavy focus on it, it helps you. It helps you see that they have a whole section. I know, Becker, you guys basically have a whole area and just specific attorneys that do just community association. Michelle, you do all associations, just associations, correct? Do you do much else
No.
outside of the community world?
If I get a referral or something for a different type of a risk, then I'll just partner with another IOA specialist for that, because I am a one-trick pony and I don't like to dabble, because for the same reason. I mean, Kip, I know that you've got an E&O policy. I have an E&O policy, and those policies have deductibles. I don't want to mess up on something because I didn't know what I was doing. So I stay focused on what I know, and that protects not only the client, but it protects me as well.
Yeah, I can echo those sentiments. I mean, there's this day and age when you know, lawsuits are they're the norm, basically. You can't be too careful, and so I think if you find a focus on one thing, you should really stick to that focus. And we do get we get requests for quotes for other commercial business, and it's stuff that we will help people with. But there's another agency that we're going to work with primarily on that to help them get there. You take focus away from the condo aspect of things, or from the community association aspect of things, and you open yourself up to errors and omissions that you might not even be aware of for other commercial businesses. So you have generalists in the area that do insurance, other lines of insurance aside from community associations, and you know, I won't throw anybody under the bus, but really trying to focus on somebody that's exclusive condo community association is very important for that real specific reason.
Did you guys have any closing remarks, or did we touch on everything, you think?
I would say two things. I would add just a couple of things. First of all, just because you have a relationship, you know, we all have relationships, and as practicing professionals, you tend to build relationships with other practicing professionals, you know, in different industries. So just the fact that you have a relationship with someone that you're contemplating giving a contract to for the association or for your association does not necessarily mean that that's prohibited. You get into trouble whenever the contract that you're awarding is maybe for an amount that's higher than market value. The person, you know, is charging much more than the industry standard for a service or a product. And you also get into obvious trouble if there's a kickback or a benefit of some kind that's being given to the board member. But as long as it's a market value, it's a benefit to the association, and if there is a relationship, that relationship is disclosed, then that's not necessarily a vendor that you have to discount or disregard. You can still consider that vendor for a contract relationship with the association. The other thing that segues into is obtaining bids. Obtaining bids for services, goods, and products is an important part of maintaining the transparency that's necessary for a board to prevent some of these kickback situations from evolving. So as long as it's in the best interest of the association and any relationship is disclosed and there's a bid process that the association goes through, that really helps prevent any of these kickback and self-dealing situations that might otherwise occur.
So it's similar, in the statute, it does say that you have to have bids if the price is over a certain amount, but that's not necessarily true for professional services. You don't have to get multiple bids for property managers. You don't have to get multiple bids for your attorney in the same way you don't have to get multiple bids from numerous insurance agents. Because it's a professional service, you're going to be going based on expertise and not necessarily on price. And to add to it, you can't really, it's extremely difficult to get multiple bids from multiple insurance agents because you have to have an agent of record. And that agent of record is basically like a power of attorney in the insurance world. And that agent is the one who's allowed to go to market, who is able to get quotes on your behalf. And if any other agent tries to do so, they will be blocked. At the end of the day, even though they're not getting paid, these boards of directors are running business. And I think that if they keep that in the back of their mind, this is a business, you are running a corporation, then they're going to be taking steps and thinking along more professional lines. And I think that that's a safe way to approach it.
Well, I want to thank the three of you guys for being here today. It is so important that board members understand these things, and it's up to us to be able to educate them about that. And we're glad to do that. And we're also available if you have any questions. I'll put the information for Carolyn, Michelle, and Kip at the end of this video so you can contact them to get the information that you need. We want to thank you for watching and have a wonderful day.